resistance levels post FOMC spike.
US dollar Canadian dollar slumps below 1.4400 as US dollar takes breather after a sharp run-up.
Hey, good morning. We'll start in a few minutes. Gold retreats further from 20,620 following upbeat U.S. data.
Mexican peso remains steady near two-week lows following bright U.S. data.
U.S. dollar yen hits 5-month high after BOJ holds rates. U.S. dollar Swiss franc backs off and trades between the close support and resistance levels post FOMC spike.
US dollar Canadian dollar slumps below 1.4400 as US dollar takes breather after a sharp run-up. Bank of England holds key rate. Steady, more members sought reduction.
Crude oil bounces higher with more demand set to come in at start 2025. U.S. stocks may regain ground following yesterday's sell-off. Euro-US dollar price forecast, corrective advance to soon be over. Swedish krona strengthens as Riksbank adopts cautious policy. Norwegian krona stable before rate decision. U.S. dollar hovers around steady levels after Fed turned hawkish on 2025.
Spot gold rebounds from Fed-driven rout. Hawkish comments cloud outlook. Euro, U.S. dollar bounces back as U.S. dollar drops. Fed sees 2 rate cuts in 2025. The U.S. equity bulls will try to make a stand here.
Oil prices mixed. Traders digest differing central bank signals. All right. You guys ready to get going? There's the link to the squawk. Coolio. So, all right. Welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Salute you. My name is Wayne. Weird camera angle, huh? Still kind of weird. Anyways, I will be your guide. Let me know what you want to do today. We're going to have a big stock market rebound. Are we going to continue the crash? Oh my God, the Fed's... Yeah, lots to do. So it really comes down to whether you're risk on or risk off. So S&P 500 dropped to our support lines that we drew weeks ago. I didn't draw these orange lines yesterday. I drew them weeks ago. So we dropped to that line and bada bing, bada boom, it held. We're back to the hourly. Let's go to a 4H. And wow, 21's way up there. Predictive is way up there. Just all over the place. So maybe not beautifully technical. Well, but there's their volatility. Another way to kind of look at this is it's just, there you go. So it just fell to the next level of support. Guess we can get rid of this. La la la. We've had this pointed down for a while, and now it has fallen. Cool. I've been a dollar bull for a while, and that worked as well. Because reducing 2 Fed cuts is the same as raising twice. I don't recall ever seeing a SEP revise so aggressively. And didn't the Fed just a couple of meetings ago slash by 50 basis points and now they're not so sure? It's kind of strange, isn't it? Bitcoin dropped to the daily 21. And is recovered. Gold has fallen because if Treasury yields are going to be higher than anticipated, they're more attractive as an investment than gold. Plus, if dollar's strong, it buys more gold than it used to. And the interesting thing is I've had gold pointed down since November. Yeah, and it rose. 1 standard deviation dropped, rose 2 standard deviations, and now has dropped back to the mean. Again, I didn't draw any of this yesterday. This has been here since November. Okay. This is a longer term view of gold. Look at this pullback. Happened in 2012, and it lasted 4 years, maybe 5 years. Interesting, huh? Is that going to happen again? Oh, I don't know. Oh, I don't know. Boop, 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 boop. So anywho, commodities, yeah. Yeah, Traders.com has been screaming bloody murder, huh, about this USD Rand up. We've definitely broken out of that down channel. Right? It's so nice that Traders Way offers these assets. I really like that we can cruise through a lot of these cryptos. We can cruise through the metals markets. We can cruise through the global stock indices. Yeah, it's really nice to have all these. Very, very nice. So I wonder if we'll get an opportunity to buy some of these dips. That's what you should be planning out, being prepared for. Do you have a plan for 2025? Would you like to know my plan for 2025? Month by month, quarter by quarter, and why? Boom, bum, ba, 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 ba. Ba, 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 ba. Okay. Month by month, quarter by quarter. Here's my plan. Of course, I'll tell you live. And then I'll update you as time goes by and variables change. Should be worth a bottle of wine, I would expect. Just looking at all of these are all capitulation, right? Yeah. Look at those dollar pairs. Very nice. So we hit our target that we set at the beginning of November. We hit that yesterday in this big drop. It went down to the next monthly pivot, which I don't really give two hoots about. So I can't tell you what's going to happen next. But if you were thinking this, that would be my standard operating procedure in a scenario like this. I don't know if it's going to do that. But what I can tell you is, do I put a lot of weight to this price? Yeah. Do I put a lot of weight to this price? Yeah. Do I put a lot of weight to this price? No. None. I don't care about that price at all. Oops. Do I care about this price? Yes. So in my eyes, it goes like this. Maybe. Okay. Not necessarily. I don't mean like reversal. But what I do mean is profit taking and then up, maybe to this future 21, this future 55 area. When you look at the yen, okay, it popped and hit the monthly target, the monthly conservative target. Monthly aggressive target is up there, 159. So 200 pips above us. What do you guys think? Can we get there? I think we'll need next week to do it. Not necessarily, right? But I think it's most conservative to think it does something like that. But this is the conservative target. This is the aggressive target. Okay. Now, if we were going to do technical analysis, this reversal zone predicts this to be the top. Okay, that's technical analysis. If you want to know technical analysis, that's what it means. But again, conservative and aggressive. The other thing that I've been teaching recently, you could take profit, you should take profit, you must take profit. Could, should, must. Yeah, well, that has to do with the Bank of Japan release yesterday, Richard. So I hope that was part of your plan. Yeah, I hope that was part of your plan, because otherwise it could have been negative 250 per pair. Okay. going out here. How far back do we have to go? Yeah, quite a bit. So this is a trade that would take 2 years to accomplish. What do you think of that? Good job, Richard. Two years for a trade like this to come together, huh? Yeah, means it's, not likely. How about that? La 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 la. So we hit target and we bounced. Yep. And I have it all drawn for you in advance. Okay. Well, yeah, Richard, I don't disagree with that. What we probably are doing is pricing in less cuts by the Bank of England and maybe more cuts by the ECB. So I've been talking about that for weeks, in which pound becomes stronger than euro. Money moves to London. And that makes a ton of sense to me. All right. Now, for the dollar to be weak, we need a lot to come to, a lot of different variables to come together. I don't know if that side is that easy to do, but I don't really mean that this is going to drop down to 95. But what I do know is if Goldman Sachs is correct, what I probably would do is sell at 130 and target 118. So sell at 130, target 120, basically, right? In whose job market? The US or the UK? Well, if that happened in the USA, Richard, that would be a buy the dollar, not sell the dollar. But what we heard from the Fed yesterday is that they're not focused on employment anymore. They're back to inflation. A few months ago, they said they didn't care about inflation. They cared about employment. And now they just did a switcheroo. Look at all these key things, drops and pops. Okay, so I guess we can go over here. And you can't quite see it enough there. Let's go to smaller ones. Okay, Swissy and USD got quite strong. That's definitely indicative of risk off. So it really comes down to whether the yen is reacting very yen specific based on last night's Bank of Japan meeting. So it's not really risk on or risk off. But what we want to do is we prefer to see yen, dollar, and Swissy all doing the same thing. So if suddenly the market decides that the Fed not cutting is a good thing because we're not going to go into recession, we're going to have a kick-ass year next year, if that's the interpretation, Swissy should weaken and dollar should weaken, and if yen is already weak, then that all is right as rain, but right now there's cross forces. Canada's loving life and living large today. All right, well, welcome to the game, Kenyatta. Rebound in Aussie, rebound in Kiwi, but these are all after massive drops. Could be what we call a dead cat bounce. Could be. Could just be profit taking on the short side. More likely. Okay. This is what we had technically. That seems to have dropped. We are now through the moving averages on the daily. And not in love with a pattern like this. If I was going to try it, it would look like this. So that could be next week if I was going to trade. But remember, next week is holidays. Hello, can we look at gold? Did you subscribe? Yeah, sure, we can look at gold. Although we already did. You were late. Okay. Look at this Kiwi, just kind of funny, huh? Clearly playing off that central pivot. Clearly people know it's there. Anyways, back to the up. USD yen we've already looked at, but you can see we've already had this planned out. That's already done and dusted. Okay. Beast. We've always been a bull on the beast. So 1 week ago in our swing trading group, I had this as the best, most likely trade. If the yens were going to go up, this one would go up. Sure enough. Now, the other yens didn't look as good, but this one definitely has happened. So that was a good setup a week ago. I guess it'd be interesting to see what happens to the Aussie. So normally I would sell this, but, you know, with what's going on, I'm going to have to take a break. But I'm going to definitely mark the charts for the future. Get rid of this old plan. I guess I'll leave it. Okay. So, what's my plan on gold? Well, my plan hasn't changed since November. Lower low. And as soon as it did that, I marked what I considered to plausibly be the trend. We didn't know at that time, but we made some assumptions. Okay? Does anybody remember actually doing this? As soon as it made the lower low, I said, uh-oh, and I started drawing all of this. The key point is the lower low. Sona says, so what's the plan? Okay, well, the plan would be to the upper bound of the range and lower bound. Okay. So what's the upper bound? Okay, the upper bound is this area. La 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 la. Bum, 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 bum. Okay. Cool. And the lower bound is here, with the slope being a negative integer. Okay. And so what happened yesterday, it appears we got to the upper bound, and we've moved back to the mean, and the next stop could be the new lower low. Because now we have a higher high, then it created a lower low, which then predicts a lower high, which it now has done. We're back to the mean, but it would predict a lower low, wouldn't it? What do you think? But the issue is, if you can buy a 10-year Treasury that pays you 4.5, remember not long ago that was 3.5, now it's 4.5. That's probably a better deal than gold. So at some point, you would think that money would flow into the USD, if I can get my mouse to work with me. Okay, USD. And then that money gets converted into ZN. What's ZN? ZN is the 10-year T-note. Okay? And that should take a bite out of inflation. Yeah, better than maybe just gold itself. Now, it doesn't mean, at some point this can't resume its uptrend, but you could probably get a better price. So right now we're at the mean. Okay, you see? What do I mean by mean? Y equals mx plus b. Okay, and you have to calculate the average of all these prices, but also the average, okay, of each price as it's occurring, so that you can calculate the rise over the run. In this case, it's negative, right? So this would have been a positive rise over the run. This would have been a negative. This would have been a positive. This would have been a flat rise over the run. That would be a positive. That would be a negative. But when you do it rolling over time, okay, it's bearish, right? The rise is actually negative. So it's a fall over the run. It's just a negative rise. So anyways, it is bearish statistically and technically. Okay. I think it can come back, in particular if inflation does become a problem. I think the first step would be money goes into the ZN first. So if the yield goes from, well, part of the issue too is now we think the Fed funds rate is 4. Okay, so what's the ZN going to be? 5? Yeah, well, we're making those adjustments too. But if at some point, and in particular if there's inflation, people will want to buy this so they can earn the 5%. And then those yields would fall, although it might be very difficult. They'll fall. And then when they won't fall no more, then you buy XAU. But typically you have inflation when the dollar's weakening. So it's really strange to have inflation concerns and the dollar's strengthening. Any questions, Sona? Now, if you're just going to do day trading, what does this chart say? Sell here. This is your target. I already have it labeled. Bearish profit target, conservative. Bearish profit zone, aggressive. But I assume you already know all that. So I'm working on an idea. Would you please give me feedback? If I set you up with prop firm funding and I charged you no money and you kept all the profits, would you be interested? Yeah, what's in it for me? I would include it in your pro membership at traders.com. So if you're a pro member, that'd be one of the new benefits. You wouldn't have to use some weird, crazy platform you've never seen before. You'd be able to use MT4 and MT5. Yep. Trades go through ECNs. Yep. Yeah, like no bullshit. How about that? You trade MT4? Okay. Now, one problem with prop firms is they teach you and design in their program that the only way you can make any money is to gamble the whole thing, which means eventually you're going to blow your account up, and they're happy with that because then you got to take a new test. What do you call those tests? You have to take a test, and then you have to take another test, and then you have to take a third test. What if there was no tests? Would that be good? But then it leaves the last question: how for the firm? How do you prevent people from degenerate gambling? Because it's not their money, right? So you might as well gamble the whole thing, and if you hit a home run, you get paid, and you withdraw the money, and then you gamble again. So what would you do to design a program that prevented that as much as possible? Because, see, the prop firms, they offer you stuff like that because they want you to blow up your trading account. So if we prevented degenerate gambling by designing a model, like the business model itself prevents it, then what do you think we could do? Nah, that's called babysitting. Maintain a certain score, yeah. What's the best scoring mechanism ever invented by mankind? There's no better scoring mechanism. How do we score success? Rightfully or wrongfully, how do we score somebody's success? Ooh, that dude's successful. Oh, that dude's a failure. How do we typically do that? Right or wrong, how do we typically do it? Right? Yeah. Right? JU says, yeah, they want you to have, they want you to be making 2% a week, not 2% a month, right? Dollars. Stingray's got it. Dollars. The successful person has lots of dollars. The failed person has no dollars. So the thought is, you put in $5,000, we put in 20 grand, you keep all the profits. Yeah. Now you have skin in the game. If you want to degenerately gamble your money, whatever, bro, you do you. As dumb could be, but it's not illegal to be dumb. I don't think you'll survive very long, but whatever. You lose your $5,000, whatever. But most people are not dumb, so they would do what they could to preserve the capital. Partially because I taught you, but also because it's in your best interest. So that was my thought. And therefore, JU, right? A high profit target per week, we get rid of that. Conservative, disciplined, patient trading with low risk, low volatility, and consistent returns will make you filthy, stinking rich. This gets you a head start. So I'll put that into the, I still don't have it all 100% set up, but hopefully very soon I can. But imagine you had that as a benefit inside of your traders.com account. No test, no sign up fee, no monthly fee, no profit sharing. Seems fair, doesn't it? No weird rules, no weird resets, no whatever, no tricks. Yep. Yeah, so Adam's like, I'm already a pro member. Cool. I'm going to try to get that very, very, very soon. I'll just add it. You can have it. You can take advantage of it when you're ready, when you want. Yep. Well, one of my goals, Adam, is that because of the extra 20 grand, you're able to at least cover the cost of the pro membership now. One of my goals is that you have automated all your fundamentals, you've automated all your technicals, you have 5 hours of performance coaching a day, and out of pocket for you, it's completely free. Meaning you make more than $300 a month being a member of traders.com, so the cost to you is free. That's my goal. That I give you something that would take millions of dollars for you to build, and you can access, use it, harness it, and benefit from it, and there's no cost to you. Does anybody share my vision? Yeah. And when you're using like these traders, right? Traders Way charts, you like your MT4. Prop funds can't use MT4, right? So you're like, no, I want to just do this. Uh-huh. Yeah, that sounds really good. Yeah. Yeah. So I think you should have two accounts. You should have your main trading account and your prop trading account. That's how I think you should do it. And then the next thing I think you should do is, as you make money in your prop trading account, you withdraw it and you put it into your master account, if you want to think about it that way. Although you're not supposed to say master anymore. Primary. Okay? You take, if your prop fund account is your secondary account, you take the profits out and you put it in your primary account. And you grow and grow and grow and compound. Because that is the secret sauce, compounding. Yeah. So really what I'm offering, guys, is infrastructure for your trading business, right? And infrastructure and funding and coaching, consulting. You have Trader's Way, which is an excellent ECN. So you have to have an ECN. You have to have money to be a Forex trader or investor, right? You have to have money. You have to have execution, in particular an ECN execution. You have to have these things. You have to know fundamentals and technicals, and you have to have a team. Now, it might be you sitting in your kitchen trading on your laptop, but you got Brian and Jessica, right? You have David and Peter, and you have Wayne on your team. You have a team. You have infrastructure. You have research. You have coaching. And now, funding and execution. Do you understand? We're at a point here where it truly will be an all-in-one platform for you. Traders.com will be your everything. You need money? We'll give you money. You need research? We'll give you research. You need coaching? We'll give you coaching. Okay? Yeah. Cool, right? Yeah, Peter Ward says, hey, that's what I do. It's easy money if you manage it. You meaning, yeah, if you play the rules of the game with the prop fund, you don't spend that money. You just use that to compensate your main fund. And that's really how you should look at it. So manage it properly. It's because they're designed for you to actually mess it up at some point. And of course, you know, Peter, you're a professional, so you don't mess it up. But most people do mess it up. And there's rules for this and rules for that. You're like, oh my God, well, you know, if there are essentially no rules, there's less things to screw up, right? What do I mean by no rules? The main rule is you lose your $5,000, you're down 20%, you're fired, your account's closed, goodbye. That's the rule. What's the other rule? There are no other rules. What's the number one rule? Don't lose 20%. What's the number two rule? Don't lose 20%. What's the number three rule? Take all your profits and plow it into your main account so you can compound. That's it. What do you guys think of those three rules? You're like, I don't know. What was the first one again? Don't lose 20%. If you lost 20% as a professional investor, you would lose your customers and the account would be shut. You would lose all your customers, and you wouldn't be able to afford to even to pay the bills. So you would distribute everything back to everybody else, and you just fold the fund. You see? So I think that's pretty reasonable. And that gets rid of degenerate gambling, right? You lose 20% in a month, you're fired. You lose 20% in a week, you're fired. You lose 20% in a day, you're fired. Well, what if you just slowly grow your account over time? You'll never be in trouble. What if you're down 3% for 1 month? Yeah, that was a bad month. You'll be fine. You'll recover. You see? It just by design, you will trade like a professional. Yeah. You'll never get into trouble. You'll be fine. This is a career move for you. Some prop firms don't want you to carry trade. No, you can carry trade if you want. Some brokers don't want, or some prop firms don't want you to scalp. Oh, you can scalp if you want. Some prop firms don't like you to hold over the weekend. Oh, you can hold over the weekend. Let's get rid of all those stupid rules, right? See, if you were going to hold over the weekend, they would have to hedge you, and they don't want to hedge you because that means they would actually have to have money. So like, Wayne, can I scalp? Yeah, why not? Just don't lose 20%. Wayne, can I swing trade? Yeah. Just don't lose 20%. Can I carry trade? Can I sit on these things for 2 or 3 or 4 months? Yeah, but just be sure not to lose 20%. Yeah. So a very interesting day here. The yens are coming back, but a lot of these things are at elevated positions. We have, let's take a look at the buck. Okay. Yeah. Whatever. I'm not overly excited. U.S. stock market. Okay. Yeah, right up into the sell zone. Yeah, look at this. S&P right into the sell zone. Boom! So, like, you got to update this one. Hang on. Indicators. Bearish. Okay. So again, pretty close. This is the actual sell zone. But notice what happened. Bada bing, bada boom. Look right into the bearish profit zone aggressive, and it stopped. So the next one is probably up in here and around. Turn around, bright eyes. All right. You got to do this. How do we want to have that? I guess like that. No, I think I'll do it like that. See the lower low? Just like we did on gold. Cool. So let me ask, I'm working on a lot of things on your behalf. I'm representing you in your future. Are you guys excited about 2025? Traders.com, tradersway.com. Give you some research, help you build a team, give you infrastructure, give you some money. What's missing? Well, if you want models and bottles, that's up to you. I might even have a couple of other aces up my sleeve if that still hasn't impressed you. But I can't declare these things because they haven't happened yet, but they are well in the works. But I've been working on some of these things for 7 months. Okay? I want you to have everything. Literally, I want you to open up a traders.com account because you believe you are building a small business. If you want to get rich quick, go somewhere else. Okay? There's plenty of places for suckers to go. We're not even interested. It smells bad. It stinks up the room. You want to build a business? I have your infrastructure, and I have your team, and I have your funding. Well, I'm pretty close to the funding part, but it can be done. I have a plan A and a plan B. Yeah. So I hope you're excited. I'm excited. Oh my God. Yeah. And that means that can free up a lot of stuff for reinvestment into even more amazing things that I can't tell you about. But the amazing opportunity well has not gone dry. Oh no. Oh no. Right? So stop hesitating and just bucket. You get it? Bucket, well of opportunity. Yeah. So anyways, the future's so bright we have to wear shades. Remember, get yourself an ECN, Traders Way. They have above average good looking people that work there. Their hearts are 2 sizes too big. They have an ethical business model. Fast execution. Pfft, dude, seriously. Okay? If you don't trade with an ECN, I don't get you. Most likely you have no idea what's going on. You don't understand. So maybe over time I can convince you, use an ECN, and that's that. Because if you think about it, if you don't use an ECN, you're not even trading. You're not even trading in the interbanking system. You're not even a trader. Nobody sees your trades. You're in a little dark pool of failed traders. Yeah. So anyways, so you're not even truly trading, which is funny. So get yourself an ECN. Be real. Peace on earth. May the pips be with you. May your profits be above average. If you're in the swing trading group, which means you're a member of traders.com, all members have access. So if you're a member of traders.com at 4 o'clock at the New York close, we'll spend a couple of hours together. Maybe not even that much today because next week is our holidays. So maybe we only 90 minutes today, huh? I don't know. When I say that, it ends up being 3 hours. But the thing is, I'll see you at 4 and we will do what needs to get done. So thank you for letting me be on your team. I'd like to think that I'm your coach, I'm your economist, and in a way I'm a stakeholder because I feel obligated to your future success. I feel there's an obligation. So I'm a stakeholder in your future, and I hope I represent you well when I talk to you in the future. The future you. Yeah, that's convoluted. I know, but hey, peace on earth. May the pips be with you. May your profits be above average.